Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are here for Monday market moves, what happened last week in the markets, and what we expect for next week. And thank you for allowing us to do work that we find meaningful. Thank you for giving us the most valuable commodity you have, your attention. We promise to do our very best to give you a return on it. All right, let's go to the charts. Starting out as always with the S&P 500. We reached an all-time nominal high. So we shot up above it, close as I could tell, getting down to the 30-minute. It looked like the all-time high previously was 48.19. We shot up about $20 above that, 48.39. That was pretty interesting. I think that was led by, you see here at the beginning, it went down and then shot up. And if we go to the dollar here, the dollar shot up and then kind of corrected down. So it looks like the dollar is going to move down. If that's the case, the S&P 500 should move up. Commodities might have a little bit more selling pressure in them. This is where I'm a little, I guess, conflicted, is because to me, this looks like the dollar's going down, which means that gold should move down, which is what happened last week. But if we look at the gold chart as well, it's also kind of looking like the gold chart's going to go down. It's kind of like this 200 moving average here is just, I heard Steve Penny refer to it as a magnet, like it's pulling it down to the 200. I really believe that gold is probably going to tap on that 200 at least, hopefully not move through it, but would like to see it go down. That may give us one last opportunity to get those gold stocks we've been holding out for. Here's another one that I thought was interesting. This is the gold divided by the S&P 500. And we can see that it hasn't been at this level since, for what is that, 16 or 17 months? This might be an easier way to think of it. Okay, so this is the S&P 500 divided by gold. So this 2.38 is saying that it takes 2.38 ounces of gold to buy one share of the S&P 500. And you can see it's essentially an inverse of the other graph. And we can see back here, that's the last time it's been at this levels. So essentially the S&P 500 is getting more expensive and gold is getting cheaper. I fully believe that we are going to go back to, let me go on the weekly here. We're going to get back to levels where it's around 1-to-1. You'll be able to buy 1 ounce of gold for the same price as a share of the S&P 500. Don't know how long that'll take, but we can see there are some blow off tops here. This is the tech bubble of 2000, where it took you over 5 ounces of gold to buy one share of the S&P 500. I don't think we're going to get up to that. I think we're going to reverse here pretty soon. I think we have quite a bit of resistance up around this level, maybe up around here that it'll correct back down, but we'll have to wait and see. All right, GDX, made a small purchase in addition to what we got on GDX. Nothing super scientific, just hitting on some support right around this level right here. You know, it may get a little bit cheaper. We might get another entry point around $26 or so. We'll have to see, but we expect gold to do quite well in 2024. We're going to want to start placing our bets in, you know, towards the beginning of this year, probably first quarter. It looked like an entry point, and so we took it. And look, RSI, MACD, and stochastic are really low, so that's the point where we want to buy. Generally speaking, when these pay dividends, they go down. It just paid a dividend. So, you know, in order to pay for that dividend, they got to pull it from somewhere, and they pull it from the shares. Okay, GDXJ, the junior gold miner ETF, made a purchase in that, and then we set a limit order. Could have done the same thing for GDX, but this is just a little bit more of a leveraged play on gold. This will go up more and go down more than GDX because it's more leveraged to gold. But we put a limit order down in here around, what is that, $31. So got one in at $33.78 and another limit order in there for $31. We shall see if it hits. You know, technicals are pretty down in the toilet, which is generally speaking where you want to buy. Franco, Nevada, still a deal. If you guys haven't gotten this one, you know, fair value, we believe, is around 125, 130 way up here. So the cheaper this gets, the better the deal is. Yeah, like that one a lot. We backed up the truck back here and doubled our position. And yeah, still a deal. still a deal. Technicals are kind of middle of the road. If you wanted a stink bid limit order, it'd be around like 103. I don't know if it'll get there, but if it does, then consider yourself lucky. Barrick Gold, we bought a little bit more of this. I was on the phone with Daniel. It took us about 2 minutes to realize that this was a buy, so we got it right there, just north of $16, and then hit another one at $15.50. That was a limit order that we put in after we bought this one, hoping it would get down. And again, that's just lining up with some back support back there, and it ended up hitting. You know, this company pays a little dividend. It's not a whole lot, but it's probably one of the best beta plays that you can have when it comes to a gold miner, if we're going to have a nice bull run in gold in this year, which we fully expect. And Sean wants to know, hey, Steve, any interest in Newmont at these levels? Looking forward to Sunday's show. Yes, Sean, I am interested in Newmont. Place to purchase on Thursday. Look at these technicals. I mean, RSI 24, anything below 30 is a deal. Look at MACD, just way down there. Look at stochastic. Looks like it could actually go a little bit lower. If gold does go down, this is going to go down even more. This company does pay a dividend, though. Let me go to the dividends here, and you can see. You know, so in 2018, 1.6%, 2019, 1.2, 2020, 1.7, 2021, 3.5, and 2022, 4.6. So the dividends are increasing. It looks to us like they are sustainable. And if gold does well, this company is going to do quite well. Their dividends are better than Barrick, but more tier 2 deposits than tier 1. So take your pick. We like to have just a little bit of each one. Same with Agnico Eagle, bought into this one, hitting right on the 400 moving average right there. Hopefully that'll allow enough support. If not, we can get more at levels like, what is that, 47, and then down here around 43 or so. So like Agnico Eagle as well. Gold Royalty Corporation, we still got our limit order in for 120. Just kind of grinding sideways here. Remember, they're going to start producing more income here in this Q1. So I'm pretty surprised the market hasn't realized the value of this company yet. But I think it's only a matter of time before they do. And while we're at the points that we are now, I think it's a deal. Origin Royalties, got this one from the Rick Rule Boot Camp. Technicals are getting a little stretched, but remember the market cap and the part of it that is available to us as retail is pretty small. So, you know, limit orders only. We have our final limit order in here for 45 cents. It may or may not hit. We might have to move that up a little bit because we're trying to track the 200 moving average. So maybe like 46 cents is a little bit better. Honestly, we don't really care whether this hits or not. We'd like it to, but we're pretty comfortable with our core position here. So maybe we'll get one last stink bid in on Origin Royalties. And silver. Silver's down a little bit for the week. What is it? It's riding the 400 moving average here. The real support we drew in right here, $22 support, and $26 is the major resistance. Oh, and I know a lot of you guys are using TradingView. And I learned a trick here. Instead of having to move this exactly and try to get it right on 22, what you can do is right click that and then go down to settings, and then you can dial in exactly what it is you want, and you can do that as well for your entry point. So let's say you bought into one of these, and you know it was one of those small market cap ones that went out to fractions of a penny. You can just right click on it, go to settings, and then put in the exact purchase price that you got it for. Do see some more downside for silver. I think it's probably going to hit 22. It may get down to 21, which would be amazing because that is below what most of these miners are able to profitably pull this out of the ground. So if it does get there, it's not going to be there for long, and that would be quite a buying opportunity, we think. SILJ, we're going to hold off on this one just a little bit. It looks like it's probably going to go down. Hopefully it gets to this $8 level, and then we'll put in, it could be a long-term position. It might be a swing trade. We're not really sure. We'll see what the technicals look like when they get there. But if silver goes down, this one's going down with it. and I see more downside than up in the near term. Copper closed the week at 378. Kind of sideways. Got a question from Jay Pierce. He says, thanks, Steve. Really love your channel. Could you please talk more about where we are in the overall copper cycle? All right, Pierce, we're right here. Not so much over here or over here, but right here. No, I'm just kidding. All right, so basically the overall base case for copper. We have, let me stop sharing screen here. There we go. Okay, so the basic premise behind this is when the economy is doing well, copper demand usually goes up. When the economy is not doing so well, such as during a recession, copper usually goes down. And if you think about that for a moment, that makes sense. If, there's a lot of things in everyday life that require copper. These computers, your phone. If we're in a recession, people are buying fewer of those. They just make do with the old phone. New homes. The average new home, the single family dwelling, takes 439 pounds of copper. The average EV takes 176 pounds of copper. The average internal combustion vehicle only takes 18 to 49 pounds of copper. So if we're moving to this electric vehicle narrative, we're going to need more copper. Now, as time has developed over the last year or so, I think because we're moving into a recession, we're going to be using fewer of those electric vehicles, and sales in the auto industry have absolutely reflected that. People are buying fewer electric vehicles, right? We don't have the power grid to support charging these things, right? So I think some of that demand is going to go away that we previously thought was there. So that's not good for copper. The fact that we're, not the fact, but the extreme likelihood that we're moving into a recession is not good for copper. So why are we placing copper bets? Well, this is where you got to compare and contrast, right? Most of the copper mines on the planet are very old and they're running out of copper. So we're going to have to find new copper deposits, permit and mine them, and pull this stuff out of the ground. 16% of the planet's population has absolutely no electricity. I think they would like to change that. About double that has access to only limited or intermittent electricity. I think they would like to change that as well. I mean, imagine not being able to freeze or refrigerate your food on a reliable basis. That would almost be a hand-to-mouth situation. You know what I mean? So I think that over the next several years, we are going to require more copper. Those old aging copper mines are going to be depleted. New ones are going to have to replace them. And I think there might be a squeeze spot there, like we're experiencing now in uranium, where, Africa and Sudan and these other countries that have almost no electricity are going to want it, and they're going to need copper to get it. And whoever pays the highest price will get it, just like we're seeing now with uranium. I think the timetable is probably going to be kicked back just a little bit because of this upcoming recession, but we'll see. I've also heard arguments that, commodity traders are some of the smartest in the world, and they've already anticipated this by this drawdown last year in copper, and now we're just kind of moving sideways, and the recession is already priced in. I have no idea, but I do know that if you think that copper is going to do well, you need to start placing your bets now, because you got to be right a year or more from now. Because if you're right 6 months from now and you got to get out, you got to pay 30% taxes instead of 15 to Uncle Sam. So we're placing our copper bets now. Probably doing it too early. We have a habit of doing that, but take that for what it's worth. That's our view on copper. All right, so the way we're playing the copper bet is COPX, and we just placed another bet right here, just another small one. We've got 4 in previously here. Not super scientific again, but you guys using the trading view, you see it probably before I draw it. There's the retracement right there, hitting right in the retracement with a reversal bar to the upside, lowish technicals down here. Remember, we just had a dividend payment, which was probably the reason this drove down. And I think maybe we've hit a short-term bottom here in COPX, because it also looks like general copper is going to go up. I think once it gets up above, $4 a pound, if we can get there, I think copper may have a turnaround. We'll see. Also, Arizona Metals had a low on Friday. Maybe you caught it, maybe you didn't. If you've been waiting for an entry into this, we were saying around $1.50 is probably the floor. Time will tell if we're right or not. But that does look like a pretty interesting triple bottom right there with the reversal bar to the upside. Technicals are pretty stretched. If you're looking for an entry into this one, then you got one on Friday. You might even have one on Monday. Here's another interesting one for copper. We don't have this one, although we've been tracking it for probably a year and a half now. This is Seabridge Gold, and as the name would imply, they do have a lot of gold, but they also have, it's something like 40 or 50 billion pound deposit of copper. So this is extremely leveraged to the gold price and the copper price, looking like it's coming into some support right here. Maybe a buy right around where we are now, around 1050, and then a stink bid down here around, I don't know, just south of $10. But this would be a very leveraged way that you could play copper as well. All right, and moving on to everyone's favorite topic right now, uranium is screaming at, we're up $2 for the week. We're up to $106 a pound. Absolutely incredible. The Sprott Physical Uranium Trust is up as well. Closed the week at 24.57. We have a discount right now of 6.14%. No pounds added, but we don't need to. I mean, look at this since inception, up over 200%. That's absolutely incredible. Our average cost into this thing, I think, is $11.50. So we've slowly been taking profits as we go, although we fully expect this to run much higher. The squeeze is happening, utilities are freaking out, and someone is not going to get their uranium. Kazatomprom, Thomas says, uranium's on fire. Any takes on Kazatomprom? Yeah. Okay, we had a turn down right here on Friday. I think it lost about 4%. Oh yeah, 4.68%. Basically, there's some news coming out, and Justin Hune called this, so a big shout out to Uranium Insider. There's a, he called that they're not going to be able to hit their target as far as, uranium out of the ground for the year. And the way he did it was by looking at their orders and their inventories of sulfuric acid that's coming in, and they don't have enough. And so I'm not really sure where this stock is going to go. I debated kind of taking some money off the table and decided not to do that. I think I'm just going to ride this out. They are the biggest uranium miner on the planet by a long shot, and we're going to ride this out. We'll ask Rick about this. We're having him on the show, I think, in about a week and a half or so, and we'll see what his take is. But they should be coming out with the news pretty soon of an official statement. They've been putting out whispers into the ethos that they're not going to hit it. We'll see what they say. We're holding. I don't really see an entry point. All these technicals are pretty stretched, but they are starting to turn down. So once we see the stochastic, MACD, and RSI down at buyable levels, then we may make another entry, or you might find yourself one. All right, URA. I was looking at this, maybe a possible cup and handle pattern forming here. The one part that I don't like about this is this shot up. Like gold has an amazing cup and handle pattern that spans like 12 years. This could be one right here. Not really sure if it is. If this starts to trend down like that and kind of form a downward pattern here for the handle, I'll be a little bit more convinced. Yeah, URA is shooting the moon. There is a little bit of selling pressure coming in over this last week. I think it's basically just, people like us taking profits. I mean, it's tough to ignore a double. Same thing with URNM. We took a little more off the table. Could be a cup and handle forming right here. I just don't like these jutting, ones up. Although it's such a small market cap, I could see how that could kind of negate it a little bit. So if we start to grind out something like that, That's ideally what you want to see in a cup and handle pattern, where it kind of angles down like that and then it shoots up. And that's, see, just like this with URNJ. And then look at this one for UROY. See how it kind of goes down just a little bit like that. We debated taking profits in UROY. These arrows are our entry points, and they're a little bit deceiving because there's so many of them. Basically, all these arrows right over here represent 10% of the bet. That one represents 40. That one represents 40. And this is 5 and 5. So the vast majority of our bet is right here, and we're up quite a bit. But we are going to wait for this cup and handle pattern to iron out. It may correct back down, but we expect this to get up around $4.50 or so. And when that happens, then we'll start taking some off the table. But so far we haven't done that. But RSI, stochastic, and MACD are in the clouds. All right, we are past the point of concern on Uranium Energy Corporation. So we took our initial investment off the table, and now we're riding on the house's money. We'll see how this irons out. So far we look like a genius, like we just called the top. We sold at 807. We'll see how that goes. Fully expect this to go higher. They're going to start production here. They're going to start pulling uranium out of the ground, and really excited for this company because they're based in America, and we believe that there is going to be a premium on American pounds of uranium as opposed to anywhere else. Boss Energy, still looking great in the clouds, just like everything else. I don't see any real patterns on here that would be any kind of entry point. If anything, it's a sell. Yeah, RSI, MACD, stochastic, all in the clouds. I would love to just see uranium go sideways here for maybe like 4 or 6 weeks. That would allow this to come back down. That would allow all these technicals to come back down, and that might create an entry point for us. Global Atomic, same thing, just shot up, shot the moon, basically going sideways here. Hopefully it looks like this for the next month or two, and then we'll do another leg higher, but we fully believe that uranium is going higher. The reason we're taking some off the table is because, you know, we still have the same risk that we did when we entered this bet, in that, you know, we could have another Fukushima and then all this goes away. I'd at least like to get back my initial bet in case that happens, and ride on the house money. You know what I mean? All right, natural gas. This one is pretty interesting. Fell quite a bit for the week. Let's see, it's down over 20%. So that created some buying opportunities in Devon Energy, and we placed 2 bets from 2 different accounts in that one. So our limit order hit down there. Is at 41, and then we slid over to the other account and bought some more. Kind of created a nice little double bottom here. Rick gave this one a 4 when it was even higher price. Paid a dividend here, so maybe that drove some of the selling pressure. Like Devon Energy a lot. Pretty comfortable with their gas position now. I don't think that we'll add any more, although if it gets cheaper and becomes a real deal, we will. Look at this, RSI, MACD, stochastic, all in buy zones. Equitable, we've been watching this one for a long time. Well, maybe, I don't know, 4 months or something. Got this one also from Rick Rule. You know, shot down, and a little bit of back support right around where it is now. So we got our entry position here into Equitable. What is that, 35.13? Hopefully it gets cheaper. There would be other entry points, right? What is that, 31.50, and then back down here around like 29 bucks. So maybe we'll get lucky and it'll go down. If you think that the planet is going to use, or North America is going to use more natural gas, this is one way you can play it. Oil. All right, oil is essentially sideways for the week. I'm sorry, it's up about 1%, a little less than 1. So way we're playing this is XLE, a real easy oil ETF. Didn't buy any last week, although there was a purchase here if you could catch it on Thursday. Did get a, oh, I forgot to put the oil, the arrow in. We got one purchase here, more of ExxonMobil on Thursday. Pretty stretched technicals down here. Would like to see the RSI go even lower. We'll see if we get it. We had someone ask about Blackstone Minerals, if we're still in that. Oh yeah, we're going to be in this one probably for years to come. This may be one of those that our estate decides what to do with. We have one stink bid in here for 15 bucks. Hopefully it hits. I mean, the dividends on this thing are absolutely amazing. I mean, look at this over the last years here: 5.8, 6.9, 8.6, 11.7, 10.1, 7.7, 9.3 for 2022. Just absolutely incredible dividends. Like this company a lot. And if you believe that in the oil narrative that when you go out to your car tomorrow morning, it's going to start because we still have gasoline, this company should do quite well. It's a royalty on oil. All right, and going to schedule Matt Warder again. I'm going to give him a call after the show right here. Thermal coal is down around where we've been waiting for it to get for the last several months. It's below 120, which was pretty much Matt's kind of what's the word, like idiot-proof way to realize when it's approaching a deal. So we're going to get him back on to talk about that. Met coal still kind of flat, 334 for the week. I think last week it was like 333 or 337. But we're going to wait for this one to get down around 250 unless we learn something from Matt when we have him on the show. Bought another position in Glencore. Now, if you remember last week, we had an arrow right around here. And then when I logged onto my brokerage account this week, I realized that limit order never hit. So I don't know what happened. I don't know if it gapped through it or whatever. Kind of grateful that it didn't buy because so if we do 100 shares here, 100 shares here, and that limit order was for 100, since it didn't hit, what we did was we just did 200 shares right here at $10.50. And then we have another bet down here in a limit order for $10. So luckily that limit order didn't hit because it went down. If it went up, we'd be angry that it didn't hit, but now we're grateful. All right, moving on to Bitcoin. Bitcoin is around 41,000 and change. Don't see any real entry points for this. Would like to see the RSI come back down, although we're not going to buy any more Bitcoin. You guys have heard me on my soapbox for that, but that's where Bitcoin is. Platinum's still below $1,000. It's just north of 900. Palladium, same thing. I mean, below $1,000. These things are getting pretty cheap. And the way we're playing that is buying the Sprott Physical Platinum and Palladium Trust, just a warehouse full of pallets of platinum and palladium bars. And you're essentially buying shares into that. Look at the technicals down here. Bounced on the RSI, low MACD starting to turn up, low stochastic starting to turn up. This is exactly what we want to see. So we bought it. We got it at 907. Hopefully you're able to catch it as well. I think it's a pretty good entry point. We'll see if time irons out to that. May end up making this a swing trade. I think we're just going to hang on to this and wait for some hiccup in the platinum and palladium market. All right, I wanted to bring up BHP here. This is one we've been in for years, and again, great dividends. Not as good as Blackstone, but we'll take a look here. What is that? 4.5, 4.8, 8.2, 11.5, 5.6. I mean, this company just pays. And look at where we are right now. Look at the technicals down here, okay? Low RSI, low MACD, low stochastic, bouncing right on the 200-day moving average with the reversal bar to the upside. We almost made another purchase in this, although we have so much BHP. I don't know. But if you don't have any BHP and you think that commodities are going to have a bull run here in the next half a decade or so, my God, this is an amazing company to do it. And it really looks like it's going to bounce to the upside here. So take that for what it's worth. We also have Rio Tinto, although not a very big position. What we did back here was we did the same thing we always do. We put in our starter position, and then we had a bunch of limit orders going down, lining up with this resistance back there, and it just never hit. So we've been looking for another entry into this thing, and don't really see it here. Usually BHP, if I cycle between these two, the charts look pretty similar because they're both basically in the same industry. But low stochastic, low MACD, low RSI, would like to see it come back down to this 200 moving average, and then we'll place another position. All right, TLT bonds. I drew this Fibonacci here just to kind of show you where there might be some resistance. Don't know if it'll get there or not. I'm going to share my screen here and we'll go to the CME tool, your favorite tool and mine. 97%, well, we'll round up, 98% of bond traders, the smartest traders on the planet, think that the Fed is going to pause on January 31st, 10 days from now, they're meeting. And then look at this, this is interesting. So going out to March, the vast majority of them thought that they were going to cut in March. Now the vast majority, well, not the vast, but more than half, think that they're still going to pause in March. And then it's gotten strung out to May. May is when most of them think that they're going to do their first cut. So we'll see. Maybe a hiccup in the banking sector tomorrow will change that. But in the meantime, that's probably when the cuts are going to come, is in May. All right, now moving on to listener questions. Scotty wants to know about CRISPR Therapeutics. So that was the one that we brought up last week. All right, Scotty, I don't see a real entry point here. I would like to see this come back down to the 200 moving average, maybe the 400. Maybe that's your first limit order. That one's your second. I don't know anything about this company. I'll draw a retracement here, and then that can kind of give you an idea of what we're talking about. See how the retracement lands right in that that 400 and that 200. So I think that's the most likely place of support. And see, RSI's in the middle, MACD's in the middle, stochastic's low. But that's usually the first one to drop down. So I'd like to see these technicals come back down to earth a little bit, and then maybe bounce off that 200 moving average with a bar that looks something like that or that, not like that, and then that might create a nice entry point for you. All right, and Keystone wants to know about AYA, gold, and silver. Kind of interesting here. Okay, let me go to the market cap here. So we've got a market cap of 900 million. Not a whole lot is closely held. So you could probably almost do a market order here, although I wouldn't. I would still do a limit order just to be safe. But if you want to get one kind of around, I don't know, what would that be, like low sevens, somewhere around there. See, I'm a little conflicted here because we have a golden cross. We've got the 50 moving above the 200. If I go out to the weekly here, it's probably not going to be too helpful. No, not really. Yeah, I'm maybe a stink bid down around here, around 650, right along the 200 moving average. Maybe you could try to catch this this 50 moving average up. RSI is middle of the road. MACD is not great. Stochastic is not great. So maybe your first order somewhere around the low sevens around here, and then after that, try to catch the 200 moving average. And maybe you can find an entry point in there. All right, and Antonio wants to know about Empress Royalty. Now this one is for sure limit orders only. This company's worth, I think, 20 or 25 million. You know, you may place a limit order and it even hits that price, and it might not hit, you know, and then you may want to go to sell it and you might not be able to sell it. This is a long-term hold. This was in Rick Rule's royalty and streaming boot camp. So it was one of the 4 companies represented. He likes this one a lot. We don't have a position in this. We probably should, but we don't. We're betting mostly on Origin and Gold Royalty Corporation. But if you want a small up-and-comer gold royalty play, I mean, you got the backing of him to do it. As far as an entry point, boy, that was a nice tick down there if you can catch it back in November, huh? Maybe around where we are now. I mean, there is some support right around here. You do have the 50 moving average, but again, this market cap is 20 million. I mean, you could have a day where no one buys or sells. I mean, there's just very little volume. But I think this is more going to be one of where you just kind of maybe place several limit orders around where it is now, and they either, you know, if they hit, good. If they don't, then maybe up the limit order a tiny bit. This is going to be a hold for the duration of the gold bull market. I wouldn't get too caught up on price. Probably just around where we are now, maybe a stink bid down here around 19 or 18 cents. And establish a position over the next few months that you're comfortable with, and then write it out. That would be what I would do. He's also asking about wheat. So it's funny because Daniel and I were looking at this one last year in February. when Russia invaded Ukraine. Now, they invaded Ukraine on the 24th of February. And we're like, okay, so the first thing we did was we looked up, okay, what are the exports like? What does Ukraine provide to the planet? And we learned that Ukraine provided, I think it was like 25% of the planet's wheat or something ridiculous. And we're like, oh my God, okay, how do we bet wheat? All right, well, I think this would be one way to do it. And we're looking at this and we're just like, I don't know why we didn't pull the trigger, but we missed an absolute monumental move. I mean, like, let's say we had just bought that day, we would have lost 8 or 10% in a day, but then we would have made 50 in about 3 or 4 days. So never placed it, never made it. I don't follow wheat. I don't really know anything about it. But if you think that you know, there's going to be an increased demand for wheat, as far as an entry point here, I would probably have like maybe a an order right around $5 and what is that, 45 cents, something like that, with a sell order around $5.30, right? Something like that. Because if this goes down, there's not a whole lot to catch it below that. So you know, maybe get an order in around there, and then an immediate stop limit order around there. So that's what we see there. And what are we looking for? Big. Leonard wants to know, what's your opinion on Hercules silver now that it's fallen from its high of 160? All right, so Barrick Gold bought a position in Hercules, which shot it up. And then right here on January, I think it was January 2nd. Yeah, January 2nd, they had some drill results come out. I'm sure that those drill results were less than ideal because the stock just dropped out of the sky. And looks like they had some bad results on that. Now, as far as a technical entry here, again, let me look at the market cap here. 116 million Canadian. So that probably means that it's south of 100 American. So limit orders only. I would say kind of around where we're at now. Maybe like this is 72. What is that? 71, 72 cents. Looks like it's established kind of a floor there. That might be one place that you can make an entry on this. Technicals are pretty stretched. Looks like the RSI is starting to slope up, which is good. But it looks like the stock has repriced from those recent drill results. And yeah, we'll see how it irons out. But yeah, that's what I see, right around 70, 71 cents, something like that. And then maybe an immediately, you know, a stop loss below that of like, you know, 65 or something like that. And VALE, Sergio wants to know about VALE. We were in VALE for, I think, like 2 years. Well, here, I can tell you, December of 2021. And we just like the dividends a lot. I mean, you know, if you think an iron ore is going to do good, I mean, take a look at this company's, oh, why aren't the dividends showing up? Something off with this? Dividends? Huh. Oh, well, they're down here. I don't know why that isn't working. That's odd. But we can click on it here. So 44 cents, 34 cents, and the stock price is only $13. So when you add that up, it's pretty good. We got out of this after asking Rick and then going through his developers boot camp. We asked the gentleman there in the chat, and they basically, what happened was they had a tailings dam fail. And when you look on Google Maps where their mine was and where the tailing dam failed, I mean, there's houses and homes and everything right there. I mean, so it killed hundreds of people, just kind of destroyed a section of that town. I thought that the litigation for that was done. Apparently it's not. They may have to pay even more. I think so far they paid something like $7 billion or something. And apparently that game's not over. So the day we learned that, we sold VALE. If you chart it here, it looks like 12%, but because their dividends are so good, we're actually up, I think it was 25.8%. So anyways, we're out of VALE because of that. Yeah, that's our thoughts on VALE. Oh, as far as an entry point, if you don't care about that, entry point, honestly, you know, when I was looking at this before the show, I see right around here, like $12.50, something like that, $12.75. And if you just look over the last couple of years, you can see that it's hit there. So what is that? 7 or 8 times around that, $12.50 to $13. It blew through the 200 moving average. RSI and stochastic and MACD are going down, and it doesn't look like there's any end in sight here. I mean, this can stay pretty low for a while, and although they are low now, there's not really any soap bubbles, any moving averages there to catch it. There is some resistance around 1340 or so, but I would rather just kind of get a stink bid in down here where it's hit before and where we think it's likely going to hit again. All right, and then wrapping up. Oh, you know what? I'm sorry, I forgot who asked about Euro. I didn't write it down. My bad. Okay, anyways, Euro is a copper miner. What is this? 1.43 billion. Okay, so you can do market orders all day long. This is a copper miner down in Brazil. Let's see, technical entry. Okay, RSI middle, MACD lowish, but not super low. Stochastic low. Below the 200 moving average, maybe on the 50 moving average, or stink bid around $12, something like that. I don't know anything about this company. You do take a risk with Brazil, but I suppose the same is true with VALE. Yeah, I'm not really seeing an entry point in here anywhere. I mean, well, I will say it is hitting along the 400 moving average right here, and it did have a reversal bar to the upside on Friday. So if you really want into it, I guess you could buy in on Monday, but I don't know. I like to see a little bit better technical setup. See, we still got a little ways here before we hit a retracement. Looks like the top end of that would be around the 50 moving average. So maybe a limit order around 1440, something like that. All right. Well, I hope that helps. I hope you guys got something out of that. Love you guys. Thanks for always being here. If you want to support the show, there is a link down in the description below. And thank you to everyone who has done so. If you want to try out TradingView free for 30 days, there's a link down in the show notes as well. I'd love to have a hive of technical traders that are just looking at these charts just like we are. And, I love doing this, and I'm very grateful to do it. I want to grow my finances just like you. And if you use that link, the show gets a little kickback at absolutely no extra cost to you. You support your favorite podcast in the process. Thank you for tuning in. Hit the like and subscribe, and share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.